Imagine this scenario. It happens every single day in 2026. You've worked hard, you've saved $5,000, you've done your research. You aren't looking for a Ferrari, you're looking for a reliable, honest car to get you to work, to get the kids to school, or to enjoy your retirement. You find it. A 2017 Kia Soul. It's silver, it's clean, it has 80,000 miles, and the seller is asking exactly $5,000. You check the oil, it's clean, you test drive it, it's tight, you pay the man, take the title, and drive home feeling like you've just beaten the system. You found a forever car for a bargain price. But then you sit down at your kitchen table to add it to your insurance policy. You log into the app, you type in the VIN, and you wait. The screen circles for a moment, then the number pops up. $642. You think it's a mistake. You think that's the 6-month premium, but you look closer. It says monthly. Your heart drops into your stomach. You call your agent. You wait on hold for 20 minutes while listening to generic elevator music. When the agent finally picks up, their voice is cold. They tell you they can't even write a policy for that car in your zip code. Or if they do, the premium is $7,000 a year. You just bought a $5,000 paperweight. Welcome to the 2026 Insurance Death List. Right now, as we speak, there is a secret war being waged by the insurance industry against used car owners. While the news is busy talking about inventory crises and EV mandates, the real story is the silent bankruptcy of the average driver. Insurance premiums have spiked 40% in the last 24 months. But it's not just inflation. Insurance companies have developed private AI-driven databases that have blacklisted hundreds of car models. These are cars that are mechanically perfect, cars that might run for 300,000 miles, but they are financially dead because the cost to insure them is higher than the cost to buy them. In this investigative documentary, I am going to open those secret folders. I am going to reveal the 7 categories of cars that are currently on the death list. I will explain the 3 reasons why a reliable car is now a liability, and most importantly, I will show you how to check the insurance math before you hand over your cash, so you aren't the next victim of the hidden bankruptcy. Before we name the cars, we have to understand the math. Why is this happening now? In 2026, the insurance industry is facing a perfect storm. Reason number 1, the disposable car era. Manufacturers have stopped building cars that can be repaired. They're building modular appliances. In 2010, if you backed your truck into a pole and cracked the bumper, a body shop could plastic weld it or replace the plastic cover for $500. In 2026, that same bumper contains 3 radar sensors, 2 ultrasonic park assist units, and a high-definition camera. A minor fender bender that doesn't even dent the metal now costs $9,000 in parts and calibration. Insurance companies aren't stupid. They see a car worth $10,000 and a bumper worth $9,000, and they total the car instantly. Because of this, they have raised the total loss ratio on any car over 5 years old. Reason number 2, the theft pandemic. We are living through a period of unprecedented automotive crime. It's not just professional car thieves anymore. It's social media challenges. It's organized catalytic converter rings. It's relay attacks where thieves steal your signal from inside your house. Insurance companies are paying out billions in theft claims, and they are passing every single penny of that cost back to you, specifically if you own a model that is easy to steal. Reason number 3, the litigation trap. Personal injury lawsuits have reached an all-time high. In 2026, there is no such thing as a small accident. If you tap someone at a red light, the insurance company assumes they're going to get sued for $100,000. To protect themselves, they have hiked the liability premium on any vehicle they deem unsafe or aggressive. This is the environment we are living in, and if you don't have the data, you are walking into a trap. I need to be very honest with you. In this video, I can only cover the 7 most dangerous categories. I can give you the names of the big offenders, but the insurance death list is actually over 300 models long. It changes based on your zip code, your age, and the specific trim level of the car. A base model might be uninsurable, while a premium model is fine. You cannot expect to remember all of this while you're standing on a used car lot with a salesman breathing down your neck. This is why I spent 3 months compiling the 2026 Car Market Cheat Sheet. This is the same database I use. It's a digital file you keep on your phone. It contains the updated Insurance Blacklist for 2026, listing the exact VIM ranges and years that State Farm, Progressive, and Geico are flagging. But I didn't stop there. I also included the Gold List. These are the 25 cars that insurance companies love. Cars with low theft rates, cheap body panels, and high safety scores. These are the cars where your premium will be $80 a month instead of $600. Buying this cheat sheet is the single best investment you can make in 2026. It costs less than a single tank of premium gas, but it will save you tens of thousands of dollars over the next 5 years. Stop guessing with your life savings. Click the link in the description right now, download the cheat sheet, and never be scammed by an insurance quote again. Now, let's look at category number 1 on the death list. We have to start with the most profiled victims, the 2011 to 2021 Hyundai and Kia models. By now, everyone has heard of the Kia boys. To save a few dollars in manufacturing, Hyundai and Kia decided not to install engine immobilizers in their base model key start vehicles. An immobilizer is a simple chip that tells the car, the real key is here, you can start. Without it, these cars can be started with a flathead screwdriver and a USB charging cable. In 2024 and 2025, we thought the problem was going away. There were software updates, there were steering wheel locks, there were settlements. But in 2026, the insurance industry has made a final decision. They are done. Major insurers have identified red zones, entire cities like St. Louis, Milwaukee, and Seattle, where they will refuse to write a new policy for a 2015 Kia Optima or a 2018 Hyundai Elantra. It doesn't matter if you have a perfect driving record. It doesn't matter if you keep the car in a locked garage. They see the VIN, they see the theft statistics, and they say no. And here's the psychological trick they use. They might not tell you they blacklisted it. Instead, they will give you a go-away quote. They will quote you $800 a month. They know you won't pay it. They're effectively forcing these cars off the road. If you own one of these cars, you are seeing your resale value evaporate. In 2026, a 2017 Hyundai Sonata is worth almost zero in the private market because no one can afford to insure it. This is a tragedy for the working class, but for the insurance companies, it's just a line item on a spreadsheet. The second category is the one that traps the status seekers. I am talking about used German luxury sedans from 2015 to 2023, specifically the BMW 7 Series and the Mercedes S-Class. You see a 2016 BMW 750i for $12,000. You think, I can look like a millionaire for the price of a used Corolla. But the insurance company sees a financial black hole. These cars were over-engineered to a fault. They contain miles of fiber optic wiring. They have air suspension systems that require proprietary software to calibrate. They have active aero grills and LED matrix headlights. In 2026, the price of German OEM parts has skyrocketed. A single laser LED headlight for a BMW can cost $5,000. If a rock flies up on the highway and cracks that headlight, the repair bill is nearly 50% of the car's total value. Insurance adjusters are now instructed to total these cars for minor parking lot accidents. Because the risk of a total loss is so high, the premiums have doubled. You might find a cheap Mercedes, but you are going to pay the price of a new car every year just to keep it in your driveway. This is the death of the budget luxury dream. This is the one that shocks the smart money crowd. Why is the most reliable car in the world, the Toyota Prius, on an insurance death list? It's not because they break. It's because of what's underneath them. Catalytic converters. In 2026, the price of rhodium, palladium, and platinum has hit record highs due to global mining instability. The catalytic converters in the 2004 to 2015 Toyota Prius are the motherlode for thieves. They contain a higher concentration of these precious metals than almost any other car. A professional thief can slide under a Prius and cut the converter out in 45 seconds using a battery-powered saw. Because of the frequency of these thefts and because a genuine Toyota replacement part now costs $3,000 plus labor, insurance companies have slapped a theft surcharge on these specific models. You bought the Prius to save money on gas, you thought you were being fiscally responsible, but in 2026, you are paying an extra $150 a month in insurance premiums just because you own a Target. The gas savings are being eaten alive by the insurance company. It is a tax on reliability. We have to talk about the future because the future is where the biggest insurance trap is hidden. Electric vehicles, specifically the Tesla Model 3 and Y. When Tesla designed these cars, they focused on gigacasting. They wanted to build cars fast and cheap. To do this, they made the battery pack a structural part of the chassis. Mechanically, it's brilliant. Financially, it's a disaster for the second-hand owner. In 2026, insurance companies have realized that EVs are unrepairable. If you hit a large pothole or a piece of debris on the highway and it puts a tiny half-inch dent in the bottom of the battery casing, the manufacturer says the entire battery is compromised. You cannot patch a lithium battery casing. You have to replace the entire pack. The cost? $22,000. Because the repair-to-value ratio is so skewed, insurance companies are charging an EV premium that is 40 to 60% higher than an equivalent gas car. If you are buying a used Tesla for $15,000, you are taking a massive gamble. One tiny scratch on the skateboard chassis, and the insurance company will snatch the car away and hand you a check for peanuts. This category targets the younger demographic, but it affects everyone. The Dodge Charger and Challenger high horsepower trims. In 2026, these cars have the highest loss frequency in the industry. They are stolen at a rate 5 times higher than the average car. They are involved in high-speed crashes at a rate 10 times higher. Insurance companies have moved these cars into a high-risk tier normally reserved for supercars like Lamborghinis. If you are a male under the age of 40 and you try to insure a Dodge Charger Scat Pack, you aren't just paying for the car, you are paying for the probability of a crime. We are seeing premiums of $900 a month for these vehicles. Even the V6 models are being dragged up in price because thieves can't tell the difference in the dark and they rip the columns out anyway. An Orphan car is a vehicle made by a company that has gone bankrupt or a model that has been discontinued with no parts support. Look at Fisker or the discontinued small cars from Ford and Chevrolet. In 2026, if you get in a minor accident in a Fisker Ocean, the body shop can't order a fender. There is no factory, there is no warehouse. The parts simply do not exist. The insurance company now has 2 choices. 1, pay a custom fabrication shop $10,000 to hand-make a fender, or 2, total the car. They choose option 2 every single time. Owning an Orphan car is like playing Russian roulette. You are one distracted driver away from having your car legally executed by an insurance adjuster. This is the newest addition to the death list. Cars from 2016 to 2020 that were equipped with first-generation active safety tech. Early lane keep assist, early collision avoidance. As these cars hit 10 years old in 2026, the sensors are beginning to fail. Cameras are getting milky from sun exposure. Radar units are getting rattled out of alignment. Insurance companies are seeing a massive spike in unexplained accidents where these early safety systems actually caused the crash or failed to stop it. They are now penalizing cars with outdated safety suites. They want you in a new car with third-generation LiDAR and 5G connectivity. If your car has old tech, you are paying a safety penalty every month. This sounds like a nightmare. It feels like the insurance companies are deciding what we can and cannot drive. And in a way, they are. They are the shadow regulators of the car market. But you can still win. You can still drive a reliable, cheap car. You just have to change your strategy. Rule number 1. Quote the insurance before the car. Never, ever look at a car on a lot without having your insurance app open. Type in the VIN before you even say hello to the salesman. If the quote is high, walk away. There is no fix for a high premium. Rule number 2. Buy the invisible cars. Thieves don't want a 2016 Mazda 3. They don't want a 2012 Buick LaCrosse. They don't want a 2015 Honda Fit. These are cars that are low risk for insurers. Their body panels are cheap. Their tech is simple. These are the cars where your premium stays low and your bank account stays full. I listed all 25 of these insurance safe havens in the cheat sheet. These are the cars that will survive the 2026 collapse. Rule number 3. Check the total loss math. If you are buying a car for $10,000 and the headlights cost $4,000, you are in danger. Look for cars with standard halogen or simple LED bulbs. Look for cars with steel bumpers. Simple is safe, simple is cheap. The automotive industry is trying to turn car ownership into a service. They want you to pay forever. Don't let them. Be the smart money buyer. Get the data, download the cheat sheet, protect yourself from the insurance death list.